So how can you prepare for this up-and-coming CPI data report? What's going on, team? It's Ricky with TechBot Solutions. Hope that you guys are all having an amazing day. I'm going to start sharing my screen so you get to see exactly what it is that I'm looking at. As you can see, only one share of SQs, one share of TQs. Didn't hold any position over the weekend. If you didn't watch my video that I uploaded on Friday, I made over $27,000. I think it was $27,555.72, something like that on Friday alone. And I made that by shorting the market, meaning that I made money as the market sold off. Now, what and how do I plan to prepare for this up-and-coming CPI data report? I wanted this video to be useful for someone that's doing it for the first time. So I really hope that you learned something new, and if you do, I hope that you can consider dropping a thumbs up and subscribing to the channel if you feel like I earned it. So let's go ahead and first off talk about what is a CPI data report. Why does it sound so confusing? Why is it important to you? Why, right? So first off, there is a CPI data report that is going to be released on, it's not going to update yet because it does it from the start of Monday, but there's a CPI data report on Tuesday, March 14th, 2023, 1 hour before the market opens. So you should be aware of this. It's a very significant report. And let me explain. A CPI data report is an inflation report. So it's released every single month, and it tracks if inflation is going up or if inflation is going down based off of specific consumer goods. There's a thing called overall inflation or overall CPI, and then there's a thing called core CPI. Core CPI tracks everything except for energy and food. The Federal Reserve understands that they cannot influence the supply of energy and food, right? So with that being said, it is tracked on overall CPI. Right now, we currently sit at a 6.4% inflation rate based off of the report that was released last month, but we have a goal of being closer to 2%, right? We started at highs of 9.1% inflation, and we've been seeing a steady decline. Now, let me explain to you why this is super important. So these CPI data reports, the reason that they are important is not just because, well, who really cares that the inflation rate is going up, right? And or that it's high. Who cares? Well, when you ask who cares, the Federal Reserve cares, right? The Federal Reserve right now is trying to moderate inflation. And the tools that they have at their disposal to moderate inflation is they can reduce their balance sheet or they can raise rates, right? Meaning these interest rate hikes that you have heard, right? What do those interest rate hikes look like? Feel free to check this out. You can see that these are the previous interest rate hikes that we have had. These are all in the 0.25%, 0.5%, 0.75%, 0.75%, 0.75%, 0.75%. This was the most aggressive that we've been in a really long time, and that's when inflation was at 40-year highs, right? That's when we're at 9%, 9.1% to be exact. May, we did a 0.5% interest rate hike and then a 0.25% interest rate hike. Now, why is this important? Why does the Federal Reserve raise interest rates? Let's talk about this, right? Inflation is high, and this happened really, or a big catalyst for why inflation was so high is in 2020 and 2021, all of those stimmy checks, right? That free money that you got from the government was being printed. I think that it's to be said that 80% of the money, cold hard cash that is in the world that's circulating right now, 80% of it was printed in the last 2 to 3 years. Pretty crazy, right? 80% of it. I think it was over $2 trillion, something like that. An insane amount was printed. Anytime that the Federal Reserve or the U.S. government gives money away, right, to other countries that might be in need, that's why there's a big disagreement behind it, because then it really affects the value of our dollar. Because the more that you print, the less valuable that it becomes. And that's when inflation really begins to pick up. So everything was good until inflation was really, really high. So how can you slow down inflation? Well, if people spend less money, then inflation will correct itself, right? We will catch up to our overall demand levels. So let me explain this. How can you control how much money people spend? Well, can the government tell you stop spending more money? No, not necessarily. I mean, they can suggest it of like, hey, maybe you shouldn't spend that much more money because things are looking pretty tough, right? Things are looking like we're in a recession, but that's not the case. The way that the government and or the Federal Reserve really moderates how people spend their money is how they control interest rates. If I were to tell you, you can borrow $100, but I'm only going to charge you 1% interest. All day, all of you guys would borrow $100 because that's a super low interest rate. With 1% interest, I mean, you can put it into treasury yields right now, and it would yield you, I think, in a 6-month note, right? It would be about 5%. So there's a lot of money to be made. It's very cheap to borrow that money at $100 at 1%, very cheap. But what if then I say, okay, I'm going to raise that rate to 6 or 10%, right? I make it more expensive to borrow money. Maybe you're going to be a little bit more selective and or you're not going to want to borrow money because, well, the incentive to borrow money is simply too expensive. Now think about you running a company, right, where you have to borrow money. Okay, well, if it's more expensive to borrow money, it's probably not going to be worth it to continue to expand your business at that point, right? This is why they raise interest rates. They make it less attractive for people and businesses to borrow money. Very simple, right? You make it more expensive for people to borrow money, people are less likely to spend more money, and then again, inflation rate begins to go down. So now that we understand how we control inflation by raising interest rates, let's go back to the big question. Why the CPI data report? Again, well, this is our inflation rate. And again, please do your own due diligence. What the entire market is focused on right now is seeing if inflation is still going down because there's an up and coming interest rate hike. Let me provide this for you right here. This is from the U.S. Bureau of Labor Statistics from BLS.gov website. The next interest rate hike is scheduled. You can see it right on over here. Oh, I'm sorry. This is for the CPI data report. I thought I had it pulled up. The next interest rate hike, for those that are unaware, is the 21st or 22nd of March. That's the next time the Federal Reserve is going to come together and announce their next interest rate hike. There was an expectation of only raising interest rates 0.25%. That was the expectation. Very low interest rate hike. That's what the market wants. That's what the economy wants, right? Because by raising interest rates less, it affects us less, right? But this is why the CPI data report on Tuesday is very important. But if this inflation report comes in higher than expected, and if it shows that inflation is not going down, right now we're at 6.4% with the last 12 months, not seasonally adjusted, right? We're at 6.4%. So all we're looking for is for inflation to continue to go down. That would be more likely to support the case that the Federal Reserve can be less aggressive with future interest rate hikes. But if this CPI data report comes in higher than what 6.4% is right now or what the market is expecting, then you better be ready for the market to drop. So now that we talked about the why the CPI data report is important, it's all because of how the Federal Reserve will take that data and then later make the decision on how much they're going to raise interest rates on March 21st or March 22nd. That's the whole fear of what's to happen on Tuesday. I believe that on Monday, because we already sold off quite a bit on Friday, I think on Monday it's going to be a choppy day because everyone's just going to be waiting for Tuesday, 1 hour before the market opens. I am planning to live stream that. So another reason just to subscribe to the channel, because only the people that are subscribed to the channel are going to be able to watch. It's free to subscribe. That being said, how would I, if I was a complete beginner, choose to trade the CPI data report? Well, I do it even how I do it now, right? As I told you, I have no open position on TQs or on SQs. For those that are unaware, TQs goes up when the NASDAQ market goes up. SQs goes up when the NASDAQ market goes down. So as long as I focus on one thing, direction, there's money to be made, right? If market begins to go up because the inflation rate comes in lower than expected, right? The Federal Reserve will support a less aggressive interest rate hike, most likely. Market should react in a positive way. Then I'll go into TQs. But if this inflation report comes in at 6.4% or lower, 6.4% or higher, then the market will most likely sell off. The market will interpret that as economic or inflation data is showing to be higher than expected. The Federal Reserve will have to raise rates more to fight inflation. Market will slow down, right? Market will drop because as they raise rates, the economy is bound to slow down because it's more expensive to borrow money with these higher than expected interest rate hikes. Very simple, right? So the way that I would trade this is I would wait for direction. You don't have to have a position. You don't have to. You could, but you don't have to. I would focus on two things: direction and position size. A lot of beginners always have a big focus on trying to have every dollar that you have in your account invested in one trade. Try something new, right? Especially if you plan to trade this report, the reaction of the report shortly after. Try to get as close to 50% as possible. Instead of being 100% invested, I want you to feel effective. I want to feel effective when I'm choosing to take a trade. And it's not about, I could have made so much more money if I went in with double. It's not about that. It's about being disciplined enough to hold yourself accountable and understand that this CPI data report this day, this can be a very volatile day. And yes, just like there's a lot of money to be made, there's also a lot of money to be lost. And that is why I am reminding you that position size is something that's super crucial, especially if you want to see a difference in your trading. Don't be greedy. Don't be afraid to lock in profits. But most importantly, again, don't be afraid to manage that risk. And by having a smaller position size, if things do begin to go south for you, then you can always more easily, still hard, but more easily, because the position size is smaller, hold yourself accountable and manage that risk. Remember, your job's not to be perfect. You'll never be perfect. I'll never be perfect. Our job is to manage and moderate how much money we give back to the market. Red days are inevitable. They're going to happen. Your job is just to control how much money you give back. That is all. And that's the beautiful thing about the stock market. Last week, I had one of my best trading weeks, right? I did 27K on Friday. I think I did, 11K on Thursday. And I did like 17K on Wednesday. I felt unstoppable. But the week before then, right? The week before that, I was losing 3 to 6K almost every day. 3 days in a row. I had 3 consecutive red days. We all have rough patches, right? 1 week, 1 day, even 1 month doesn't define you as a trader. And I just want to remind you of that, right? The stock market is a horrible place to learn that you have an ego problem. We're not here to be perfect. We're here to just be a little bit better than what we were last time. That's all. So I'm very excited to trade this CPI data report with all of you guys. I hope that most of you can consider dropping a thumbs up and subscribing to this channel. It's going to be a fun live stream. But again, it's only going to be for the people that subscribe to the channel. So make sure you check that out, right? One thing that I do want to remind you is we are running our biggest sell right now for LPP. So it's the people that get to watch me trade live every day. It's a one-time payment. It's lifetime access. And yes, it's all inclusive, meaning that you get access to the A to Z video lesson library, the daily live trading session, the private group chat, and access to the TechBuds HQ. You also get 5,000 automatic entries for the GTR giveaway or $50,000 cash. That is correct. A lot of you guys know that we are running this giveaway. It just started, but even just by signing up, you don't have to do anything. For signing up, you automatically get entered for a chance to win the 2019 Nissan GTR Track Edition or $50,000 cash. So if you want to learn more about this and how you can enter, then click the second link down below. Another way that you can enter is also by shopping at shoptechbuds.com or the fourth link in the description down below. So for every $1 that you spend, it equals 5 automatic entries. And remember, you can't win the giveaway if you don't enter. So it's that simple. So select your favorite items, get entered for a chance to win 2019 Nissan GTR or $50,000 cash. But we have everything from trading mouse pads to trading apparel, wall art, to just buy items that you actually want. So I really do appreciate you guys' time. If you guys have any questions, please feel free to reach out to me via Discord or via Instagram. And that's the first or third link in the description down below. I do want to remind you, I'm verified on YouTube, I'm verified on Instagram, and I'm verified on Twitter. My team will never reach out to you first. We never ask for money. Those are all fake accounts. I can promise you that. I offer one thing, and I'm very blunt about this. I offer one thing, and that's my Learn Plan Profit group. So if you want to work with me on a closer basis, I offer one service, and that's to watch me trade live every single day. It's the second link in the description down below. You don't have to go anywhere else. Second link, LPP 2.0, that is the only thing that I offer, nothing else. I don't trade for other people. I will never message you through WhatsApp. I can promise you those are people from third world countries just trying to take your money, pretending to be me. I offer one thing, Learn Plan Profit 2.0, second link in the description. And if you join today, you can watch me trade live as soon as tomorrow. I appreciate your time. Like always, let's make sure that we end the year on a green note. Take it easy, team.